Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Forex market. So this weekend we discuss in the weekly report few hot topics. This is Brexit, coming Fed meeting, and political situation in the United States. So on the Brexit, just to keep it short, details you could read in the report. I'm mostly gravitating to the hard scenario, so I think that hardly the agreement will be achieved by the few moments. First of all, it was a statement from the Boris Johnson concerning the recent stage of the negotiations, and it was not successful. Second, the United Kingdom Navy forces have got the order to prepare for patrolling and protecting of the Great Britain waters if hard Brexit scenario will take place. And finally, the markets mostly are preparing for a collapse because the put-call ratio on the Great British pound have increased to 8-month high. So volatility is rising, and prices of the put options become significantly more expensive. So it means that the markets mostly are aimed on negative results of the negotiations. So taking this all together, I suppose that if negotiations really would have some positive progress, hardly these orders and these announcements have been made in the news agencies. So somehow I suggest that the hard Brexit now is more probable than the positive result of the negotiations. Maybe it will be smoothed by some additional agreements to continue negotiations in the next year, but mostly I would suggest that will be negative result. So as we discussed this a couple of weeks ago, markets mostly suggest that in a negative result it will be impact approximately for 7-8% for the Great Britain to the downside. So approximately this is level of the 120, 121. So that's approximately the area that Great British pound could reach if really it will be no agreement on Brexit. Oppositely, the positive result, signing agreement, could push Great British pound in opposite direction for the same level. It will be approximately 140. So that's what we have on the Brexit. Speaking on the Fed, I suppose that hardly we will get any new stimulus because the overall global tendency among the central banks now is based on a vaccination. So central bank stands in a standby mode, stand on hold, watching how vaccination will impact on the markets and in general on the economy, what the results will be. Actually, the fact that the European Central Bank has provided less stimulus than markets have expected mostly is based on the starting of the vaccination. I suppose that if we wouldn't have the starting of the vaccination, the European Central Bank would announce better measures, better support to the markets. So, in the political situation, just in 2 words, you know that I'm a bit worried about the political risks in the United States. And as you know, the Supreme Court denied the Texas claim for contesting of the results in the 4 states. And it means that Donald Trump right now stands on a 100 beast because the voting of the colleagues will take place right on Monday. The Supreme Court is not on his side currently. And I think that the only tool that he has still in his sleeve is to announce the emergency regime. So that's the only that he could do, because if voters will vote, it definitely will be the just confirmation of the Joe Biden victory. After that, it will be official result of the elections. And after that, all his claims will become not the claims of the president to the opponent in contesting of the results of the fraud elections, but as he stopped to be the president, it will be just the common citizen claim to the president of the United States. As you understand, in the new conditions, it's really small hope that Donald Trump will succeed in his efforts. So it means that he has to act fast, and I just worry that it could take the extreme measures and shoot on the Gulf and just do some really extreme decisions in the coming week. So that's why we think that the political risks could exacerbate on the coming week. So speaking on the euro currency, we do not see any problems with our central scenario that euro should continue gradual upward action. Perspective for the few months, we're still watching for 125 first and then 128, 130 area. We do not think that European Central Bank will take any measures to stop appreciation of the euro currency until these levels. So above these levels, maybe it will be some worry and some verbal interventions, maybe some other methods they will apply to hold the appreciation of the euro currency. But until these levels, it's not really big appreciation, so I think that until 25, until 128, hardly something will be done on this subject. So on the technical picture, as you can see, market mostly stand in a very tight range in recent week. That barely impacts on the technical picture, especially on the higher time frames. I would say that on the monthly, on the weekly chart, we have bullish trends. Market is not at the overbought, and we continue our journey with this scenario that we have on the daily chart. As you see, on Thursday we've got the bullish grabber that we intend to get. That gives us more confidence that maybe market continue upward action. We aimed on this near standing target first, is 2260 approximately. That's XOP of this ABCD pattern, and 1618 extension of this XA swing here. Let's just bring some resistance, additional resistance here. Market is not at the overbought as well. You can see market easily could continue upward action, so now no significant barrier stands in this area. Overall picture looks relatively simple. That makes it easier to control the vital price behavior. Particular to our case, you can see market stands in the flag, and it means that market has to break this flag to the upside and should not break it to the downside. It makes it easy to control. So if market will drop below these lows and drop out of the flag in opposite direction, it means that the short-term positive mood is broken, and you should be prepared for a deeper downside action, deeper retracement at least of maybe something greater. That's relatively simple. So in fact, invalidation area coincides mostly with the grabber lows, stand slightly lower. But simultaneously, we need to consider a couple of the scenarios. For the first scenario, I call it as a perfect scenario. So if you remember, on Thursday we discussed this high wave pattern and said that to keep scenario perfect, to keep the perfect bullish context, market preferably should turn up inside the range of this high wave and just continue upward action. This will be perfect. Also, you can see the mining bullish grabber has been formed, and maybe indeed this will happen. But still, alternatively, if market still will drop out of the range of the high wave, starting dropping it lower, alternative scenario, reserved scenario, stands with this deeper ABCD retracement back to the 120, 30, 120, 40 area. So for completing of this ABCD pattern. But this scenario will not break the bullish context, because mostly if market even will drop to this area, it remains first above major support. It's above the broken top, above the confluence. Second, mostly price will remain inside the flag. It will not show the downward breakout. It means that for us this is not good, not perfect, but it's acceptable. So currently you can see we have the two possible ways of progress. Here it could be immediate upward reversal and upward action. You can see in this case it will be probably kind of the butterfly pattern. So market will start upward action, forming the right wing of the butterfly here with upward acceleration. Or alternatively, it could complete first ABCD, giving us guarded triple to buy here, starting somewhere from the 120 confidence support, and then should continue upward action. So anyway, invalidation point here stands right here. And if you have in mind to take the long position on the euro, you should count on the stop placing somewhere below 120. Why we're using 120? Because on the hourly chart you could see that we have this ABCD pattern with the XOP 20 or 6, and occasionally it could be some spikes if the ABCD will be formed, maybe some spike to complete the XOP target. That's why it would be better initially to place stop order below this area. So on the hourly chart, it mostly has relation to the first scenario. If market keep it perfect and starts upward direction or up from here, we actually discussed this on Friday. So here is some kind of the reverse hand and shoulders. That's very typical for a modern market to form this pattern on the top. And market right now stands at the point that we have specified on Friday. So we said we suggest a possible drop somewhere to the 121 area because here stands harmonically previous lows, the bottom of the left arm, and here as well should be the bottom of the right arm. So it means that we need to consider on Monday two moments. First of all, is the 129 area. So market has to start upward direction somewhere above it from the 50% support and resistance right here, or from the 618. Anyway, it should be above the 120.90, somewhere from this level, start upward direction. Or alternatively, if it will start dropping lower, then we are waiting it for 120 drop to the confidence support and turning to the second scenario in our case. So that's two moments to keep an eye on. So you need to decide whether you would like to take part in both scenarios, or you will choose just one of them to focus on, or you split your position, take the 30%, for example, here, and keep the 70% for the drop if it will happen to the 120.30 area. So this is mostly just personal and doesn't make impact on the overall trading plan that we have. So let's keep watching what the progress we will get in the beginning of the next week.